What's up, guys? We've just entered September. Oh man, is it September already? Welcome back, everyone. My name's Paul. Today we're going to be looking at my portfolio, what I've been buying and what I'm looking to buy in the next month. I'm also going to have a look at a few things that might affect us in the next quarter. While everyone's been banging on about the Federal Reserve and keeping the market up, no one's really talking about the UK and what the Bank of England's been doing. So we'll have a look at that. We'll have a look at my portfolio, see if that affects anything that I'm doing. By the way, guys, we're at about 9,400 subscribers. We're getting pretty close to 10,000, which is weird. So if you do like these videos or find them entertaining, please feel free to like and subscribe. Knock yourself out. Okay, so today I wanted to look at the Bank of England and see what it's doing to the FTSE 100. As you can see, the FTSE 100 really hasn't recovered much. It's pretty much looking like any S&P 500 value stock at the minute. It's just not really going anywhere. I wanted to touch on this today because I wanted to see if there are any differences between the way the Federal Reserve has handled this crisis as opposed to the Bank of England. What got me was the use of this quote by Andrew Bailey. Now, Andrew Bailey is the UK equivalent of Jay Powell. He's probably less sexier if you're judging the two guys together. But also Andrew Bailey's got a slightly smaller money printer and he tends to use it a lot less as well. This could be one of the reasons why the FTSE has fallen behind so far. I mean, there's a lot of other reasons as well. But what I found interesting was the use of this quote that is, "We are not out of firepower." Now, this is very similar to the quote from Jay Powell from like March time, something like that, when they were saying they're not out of ammunition when it comes to their quantitative easing. It's interesting to see the change in the rhetoric as the FTSE starts to kind of turn over a little bit. I know it's designed to sound quite aggressive and quite powerful, but it actually feels to me that it's quite desperate as we head into quarter four when the furlough scheme's ending. There's going to be a lot of job cuts. But Andrew Bailey even admits that they haven't actually done that much bond buying in comparison to the US. So they do have a lot of room to print a bit more money, buy a few more bonds back, maybe bolster the economy that way. What I don't think they're looking to do is go into negative interest rates. That historically hasn't really worked and could have a bit more effect on inflation than, say, what just bond buying would. But Andrew Bailey does think that the UK's quantitative easing measures have been a bit slack and he's ready to pile in a bit more. He's looking across the Atlantic and he's going, their stock market's doing really well. It must be something we're doing wrong. Right, let's get on to the portfolio. This portfolio is at 12,445 right now. This is a dividend investment, dividend growth portfolio. The aim of this portfolio is very much a newbie experiment because I liked the idea of dividend investing. I still can't get my head around picking growth stocks. I still don't quite understand it. I still don't understand how to find a company from years and years before yet. It does seem a lot like luck to me still. So I see this way as a much more safe way, as a much more understandable way of me growing wealth over time. This is a long-term portfolio. It's very unlikely to make the same sort of gains as, say, some of the bigger stocks. And I'm also not into index investing because I don't find it interesting enough. I feel like if I was index investing, I wouldn't be as likely to prioritize my money towards investments. So this dividend growth investing idea is something that I'm following right now because it fits my profile. Something else might completely fit your profile, and that's great. So next month, I'm looking at prioritizing certain stocks. I still haven't got myself into the swing of things with the Autoinvest feature yet. It's just not me right now, but I have added all my stocks into an income pie because it helps me see what weight everything's at. And if you want to take a look at it, there'll be a link to it in the description below. That just shows you all of the stocks that I hold and how they're weighted in my pie. I've been buying a few different stocks this month and I've been adding to a few as well. I've also held off a lot, so let's take a look. AT&T I'm going to be continuing to buy. I do believe this has got a lot of upside. I think there's so much cash in there. It's paying down its debt. It's got HBO Max coming. I just think there's a lot of upside to it and there's a lot to gain in the long term from AT&T. BAE Systems I have stopped buying. I'm just holding on to it at the moment. I'm just not 100% confident in the UK as a whole right now, so I'm holding. It's a great company. I'm just going to hold on to it for a long time. A new one for me is Bristol Myers Squibb, likely to be buying a little bit more over the next month. I had been sitting on this one for a long time. It just kind of dropped out of my memory for a bit. So I got nudged back towards it. I saw it was relatively undervalued, and I was really convinced by their apixaban market. There's actually a real possibility that Bristol Myers Squibb could have 100% control over the anticoagulant market. That's massive. 100% is quite a lot to ask, but 90% really isn't out of their range. I was quite impressed with that, and that's why I pressed buy in the end. Another new one is Digital Realty Trust. I really like this company. Digital Realty Trust are a REIT that are focused on data centers. This is a heavily overvalued stock in comparison to its earnings. I have to point that out, and I bought it very overvalued as well. I personally don't feel it's overvalued because I feel like it's got a long way to go. Also, it's right at the start of its dividend growth journey, and it has many, many decades of dividend growth to go. I did pick up some Intel. I wasn't sure about this one because Intel to me has always been seen as like the evil conglomerate of the chip makers. But the short-term news drop of that chip delay did open up a lot of value. I was eventually convinced by a video by Cameron Stewart, CFA. He basically does all the cash flow and revenue based work that you need to do. So I kind of don't do it myself anymore. I'd really recommend him because he's got an excellent handle on the numbers. Far, far better than I could do. He basically saved me like 6 hours of work looking into Intel. Either way, I was happy to see that there was a lot of safety in the numbers. I see that it's got a lot of upside, and I'm happy to buy in. The news of the delay is still something I'm going to have to work through. I'm still a bit funny on their acquisitions as well, but I do know that this company is going to grow. I just don't know how fast. Royal Dutch Shell is still the biggest loser in my pile. I have stopped buying it. I'm just holding on to it now, mainly because I kept on buying so much of it, it was just taking over my entire portfolio. I'm still very confident that they will make the right acquisitions for the future and that they will turn everything around. Another stock that I will be buying well into September is Walt Disney. I still believe that Walt Disney is completely undervalued from a quality perspective. Numbers wise, I do think the calculated value of this stock sits at around like 110, something like that. But I must admit, I haven't looked into that myself recently. I do believe that from a quality perspective, Disney is going to restructure itself as a streaming service, and it's going to do very well off that. It's by far winning the streaming growth race right now, and I feel like it's going to nick a few investors off Netflix. So they're the stocks that I'm continuing to buy this month. The portfolio sits at 12,400-ish. I think the return at the moment is around 4% in real terms. Dividend-wise, it's been a bit crap this month with only £5.74 of dividends coming in. Next month, however, is going to be a big month. It's the first big month where a lot of my portfolio crossed its ex-dividend dates. So there should be a lot of money coming in, and we might see a significant rise in my dividend income. We'll have to wait till next month to see though. Thank you very much for watching, guys. The app that I use for investing is called Trading 212. If you wanted to get into investing, you can use the link in the description below. That signs you up, and if you make a deposit, you get a free share and I get a free share as well. Feel free to catch up with myself and the others on the Discord. And if you enjoyed this video, please feel free to like, subscribe, and invest.